Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 4th of February, 2019, and the time 2:55 p.m. Central Standard Time. So as we take a look at these markets, you can see one of the events that's happening is the dollar's trying to rally, the euro's trying to break. In fact, most currencies are trying to break. We have the State of the Union tomorrow. This is an important week for the dollar as well, because while everybody talks about the Fed government and the 15th of February being another shutoff date, it's really before that. If you watched TV over the weekend, you saw different congressmen coming on the Sunday morning news shows, and one explained it beautifully. He said, you know, you really have to get whatever the plan's going to be in place on Friday. You got to print it up over the weekend, deliver it to the different members of Congress. They have to review it, vote on it, and then you're before the 15th. The cutoff date's this Friday. Yet tomorrow we have the State of the Union. What's going to happen? It's going to get very interesting, because is there going to be movement on the border wall, and what will the president take or not take, and how's it all going to get done? In the meantime, the gold is feeling pressure, as is the silver, off the rally in the dollar index. And you know, the dollar index was the trade that I think more traders had wrong in January of 2018 with their predictions going forward than anything else that I looked at. And I looked to see, as I wrote my report last night for my traders, how did the dollar fare against 10 major currencies, the big ones? The yen gained against it, and it basically did what against all the others? The yen fell and it gained. Now is this the year where it's going to lose? That's what I meant to say. As you can see, the gold's had a heck of a rally. It's come off of the recent break low of 1180. Yes, I can argue that the actual low on a closing basis was here, but then it made that pattern of lower highs, lower lows. So it's been a heck of a ride to the upside. The market's leaking a little bit, starting to roll a little to the downside. You've had a pattern of a lower low and then a straight up vertical move. So you went from this 1281 level roughly to the 1331 level, and you're finally backing off. It was a $50 rally, so you're giving up some of that. The 18-day average, what I call the line in the sand, is back here at the 1302.5 area. I think that's where a lot of pros are waiting for the market. Wouldn't be surprised that a lot of people like the market against that number. By the way, the bias is up because you're over that 18-day average. Notice the upper Bollinger Band. We did get over it for 4 days in a row or so, and I told you, come that 5th day, the odds favor it's going to try to break over, and that's it. All that it means when you go over is if you're looking for entry, sometimes you can get a better spot, and that's it. What my work teaches is you don't buy over Bollinger Bands and you don't sell under them. Take my charting course, you learn why. But is this now a resistance point? It certainly is at the upper band. Let's call it the 1326 level. What about momentum? Momentum's overbought. You have a market that's got readings in the high 70s. I define anything over 70 as overbought. It is not embedded like it was here when the numbers that make up the slow stochastic go sideways over 80. That is not what you have. So I have an overbought market that's got resistance at 1326, and as I see it, support 1302.40. The bias is up. You're trying to correct a bit in the momentum here, and you're not trending. In the gold ETF, GLD, you've got the lower low, higher high, similar formation. You were up, what, 4 days in a row or so over the upper Bollinger Band, fell back on Friday, further follow through today, and also overbought as can be. In GDX, it's different. You've had the pattern of higher lows, higher highs. And as I said, anytime you get to these Bollinger Bands, I think the pros are stepping out. But there's a difference here. Notice that both numbers are over 80. Both numbers were over 80 on Friday not on Thursday. You get another day of over 80 and you could be talking that the market switches gears from being overbought to locking in a bull trend via the slow stochastic, which is a strong technical signal. Doesn't mean it has to go up, but it'd be very strong. Markets typically don't embed. They get up to overbought, and that's where you're at now, overbought. You need 3 days in a row under that or oversold. We'll see if tomorrow offers anything like that. In the gold-silver ratio, what keeps me friendly is that the market has gotten itself from the differential of about 84.5, way back under now that 18-day moving average of closes, and that keeps silver relatively stronger than gold. And I like to see base metals moving with the market. In the silver, you made a run for that line in the sand, that 18-day average today. Didn't quite get to it. Found buying on the way down. That was the evident thing. You have the pattern of higher lows, higher highs. I still look for support there. So while the bias is up and the trend is up, you are in overbought territory, and momentum is trying to turn down in this market. In the copper market, copper's all about, gee, maybe the president does something with China. You can't tell me that the Chinese their economy's looking super strong. It isn't. But their service sector's still holding up. Manufacturing's okay. Is their growth really 6.5%? I doubt it. But you've got the higher lows, higher highs. The market went up to the combination of the 100-day average in green, the Bollinger Band, got through it, came back, testing, and back to that upper number. In the platinum market, same thing. The 100-day to the upper Bollinger Band is a resistance point. You are overbought in an uptrend, having troubles in that upper resistance. And pretty much the same thing is true in the palladium market, where you've got the higher lows, higher highs, but you're unable to get through this Bollinger Band. I would not be surprised to see more churning action against that 18-day average of closes. Then we get to the dollar index, where I really thought the market was not going to be this strong today. The market gets over 95.69. It takes out this version of the bearishness. Why? You'd have a lower low and a higher high. It would not start a bull trend. You just might have to be in this pattern of going back and forth. If you don't take out this 95.69 and you take out today's lows of 95.30.5, I think the bears will say, gotcha, and the market will try another break. Got to see if that happens. And obviously, you're forced to see what the State of the Union is. It's typically boring as can be, but it's there. When we talk about metals, you should also pay attention to seasonal trades in metals. Here we are on February 4th. Already the March trades are coming out from the more research. They're out already. So we have an idea on spread trades, on cash market trades, and so on, what history has shown us. And let me tell you that caveat with history. History does not have to repeat itself. Past performance is no guarantee of future performance. But when I go to certain markets, cash markets, when I want to see, is there a demand for scrap at a time of the year, things of that nature, I start looking to see what they've got to offer, and I find it very interesting and another tool that I put into my tool chest. How long have I been taking this service? You might ask that, by the way, and you should. It's not a paid advertisement. I buy my research just the way other people do. Probably 3 decades. So I certainly know the service very, very well, and I like to see what it offers and cash versus futures, how it's all working. Then they have great articles that you might want to read about what moves markets, what doesn't at any given point in time. So how do you get a free 2-week trial? Just give us a call. My staff will get you set up. Go to our website. You can sign up for it. Simple way to do it. You can click up here. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein. You have a good day. See you tomorrow.